Hello everyone, welcome back to my channel. So this video marks the end of the week number 23 in this road to 100k realized returns challenge. This week was a bit shorter because on January the 1st markets were closed because of the New Year's Day. It was a holiday, and so despite the festivities that took place, markets continued for the most part its somber mood, as markets were on the decline for most of the week, except yesterday on Friday, when markets offset some of those losses, especially as you can see the Nasdaq right here, which climbed almost 2%. And so despite that, I noticed, and I could not take advantage of it, on Thursday at the end of the session. 4 motor company shares fell to a minimum of 9.65, which was of course a bit unexpected from my side, because I was not expecting that it would come back to that level of price at that particular moment. But as you know, and we already discussed it seems that there must be some level of support around this level of price right here, as you can see, judging by the graph here. And so because of that, we took advantage of that, and in the beginning of yesterday's session, as the prices hovered briefly around that values, we managed to go ahead and buy 600 more shares of Ford Motor Company for the price of 9.66, and this the timing was still good enough because the price came back quite sharply, 2.5% up to finish the day. By Ford Motor Company standards is quite good, and so we still managed to lower our cost basis, and we'll have to see it a little bit later in the video what will be the new cost basis that we will have on our holdings of Ford Motor Company. But not only that, we use this 600 new shares as a collateral to sell 6 more contracts, 6 more call contracts with a strike price of 10.50. But we would have to use a 2-week call option, so will expire on January the 17th, and in order to collect some sort of premium from that. Of course, now the position is at a loss because the price has increased in the meantime. However, this doesn't really matter if this ends up in a losing trade, because if it ends up in a losing trade, that means the shares were assigned by maturity, and that's exactly what we want. And if it's assigned, it will be assigned at 10.50, which is very unlikely, but if it happens, we'll still manage to get a quite handsome profit, because we bought the shares at 9.66 and we sell at 10.50. And next week we'll probably do the same with the remaining shares that we have, the 3,700 shares that we still have without being used as collateral, and we'll probably try to sell some more calls, 37 more contracts. Given the call we had expire worthless, the shares are now unburdened, and so we can use them as collateral again to sell more call contracts and see what happens. We are happy either way, if it's expire worthless or it is assigned. Ideally they would be assigned, but if it does not, we'll still keep the shares, we get the premium. And if it manages to go if it ends up with reaching maturity with a price at least at this level 10.31 or above, we'll be happy to simply sell the entire holding outright and pocket the proceeds, and of course any capital gain that will come with it for sure. So this is it for Ford Motor Company. In terms of Pfizer, it continued to be a very, very sedated behavior in terms of the stock price. Now, for next week, probably we'll be able to sell some calls on that, because the 28.5, which is the strike price we are aiming for, it's not available for 1 week, but it's still available, but it became available for 2 weeks. and so it's a meager premium. It's almost irrelevant, but still it's better than nothing. And yeah, we have these shares in our portfolio sitting without producing any income, so probably that's a step that we will consider come Monday at the beginning of the trading session. As for QQQ, yesterday it made a quite good recovery, and because of that I decided that it was not worth waiting that much anymore, and we decided to sell some calls, even though this is a 3-day call, not an overnight call, 0DT call. The premium is absolutely almost meaningless given the size of the position, but still it's better than nothing, and chances are it will not get near this price for the next few sessions, and so we will not be losing anything very significant on this in terms of opportunity cost of returns that we left on the table. And so we will have to wait and see what happens. Hopefully the price will continue to recover, and if that happens, the next calls we sell will have much more juicier premiums. But we'll have to wait and see what happens. For the time being, this is it. As you can see also right here in the trades that we did, the 37 contracts expire worthless, of course, because the strike price was 10.5 and the stock finished the week at 9.89. And so we'll just input these trades in our scoreboard and see then, because I'm very curious to see what is the new average price for that, or the new cost basis of Ford Motor Company that we have. So let's start first by, let's just copy this because this information is almost the same. So this is on the 3rd of January 2025. This is Ford Motor Company. It's 9.66. It was 6 contracts. We received no premium because we bought directly, and if I'm not mistaken, the fees we paid was 302. So 302. All right. I already prepared here the values to make sure that when the calls that the 6 contracts that we sold on this particular stock were entered into maturity, the result will be accounted for as a return relative to this particular set of shares. And so because I'm already marking this cell here, let's just input next our trade of selling the calls on Ford Motor Company. So these calls expire on the 17th, right? And this is again Ford Motor Company. This is a covered call, right? The strike price is 10.50. The collateral is 6 contracts. I already prepared this formula right here. So because the actual collateral is the price that we pay for the shares, which is right here, and the number of contracts, which is also 6, which is right here. We received 4 cents in premium, as you can see right here. All right, so 4 cents, and now we have to determine how much is the premium or actually the fees that we paid. As you can see right here, I already did the calculation to make it easier. So these are the 4 entries: 1.48, 56, 53 and 2.18, which managed to get the grand total 475. So this is our commission that we paid for that, right? And now finally let's going to input our the calls we sold on QQQ. So this expired on January the 7th. This is QQQ. It's a covered call, and the strike price is 536. 3 contracts. Again, if I'm not mistaken, we also receive 4 cents. Yeah, this is exactly it, 4 cents right here, right? 4 cents, and we paid 1.14 in fees, so 4 cents and 1.14 in premiums, in commissions. Now we are in a position to determine how much did we pay for the premiums, or yes, let's just try to do that, or rather we just have to finish here the let's see. Yeah, I already closed it. I forgot to mention that I already closed this trade. So as you can see here, the options expire worthless, the 37 contracts, so there is nothing to be paid. We simply pocket the premium, and as you can see, it expired yesterday, so it's 4 covered call, 1050, 37 contracts, and this was the actual collateral, right? Given the fact that it considers all the acquisition value, acquisition price of all the shares we had, and it expired worthless. All right. So, and as you can see, just by having here, because I already had these calculations prepared, these are the new costs at which we had to sell these particular shares in order to break even, price per share, of course. Now, the next thing we will do is to see how much it will change here, this average price. So let's see. So this is the, let's just copy this section right here, because this is the entry of the last acquisition we did. So let's just put it right here, right? So it's let's see how much is it actually. Let's just, before that, what is the line? The line is 323. It's this one, right? So let's just consider that. Now let's see, we can do it with this one. Let's just copy this here. Right. Now this is a 323, 323, and again 323. Good. Now the next thing is to add here plus this particular value, but for the 23, which is basically the number of contracts, all right, to make sure we get the average value, and this is it. So now we will be able to break even, considering commissions that we paid on the acquisition, including this loss, which is somewhere around here. Yeah, this loss on that covered call, on that call that we had to buy back. So considering everything, we will be able to break even, all right, if we sell at 10.22 our entire stake of 4,300 shares. Of course, as you can see, even if we sell exactly 10.22, we'll still have a very, very, very small profit, but it's really irrelevant. At any value on top of that will be a profit for us. And so, yeah, at least it will make it easier for us to dispose of our shares, as the price will not need to go that much higher for us to be able to sell our stocks. But yeah, for now this is it. We'll reconvene at the start of the week number 24 in this challenge on next Monday, and see what trades we are going to do. And yeah, I'll see you there. Oh, by the way, one more thing that I forgot, which is important for the context of the challenge, is that the new activity statement, which mentions the all-time realized gains. All right, we have it right here, and this is the realized and unrealized summary, and this is the realized set of columns. And as you can see right here, this is the new value that we have to account it for, which is a 26,000.19921. All right, so this is the current state, and this is the number that we will have to account it for to reach 100,000 at some point in the future in this challenge. All right, which is the total. And now, yes, this is it. Feel free to leave your comments and any questions in the comment section below, and feel free also to like the video and subscribe to the channel. And as always, I'm always available on LinkedIn in case you want to ask me any further questions or launch any discussion through there. And now, yes, I'll see you next Monday.